Hey guys, Czar here. Hope all is well. Happy Monday to you. I hope you had an amazing weekend. Trust you're having a good morning so far. We're about 2 minutes away from the open here on New York. Let's take a look at the daily frame as usual. The NASDAQ, the S&P, and the Dow, the three sisters. We have a very bearish or significantly bearish situation going on here. As you can see, we have another down day, guys, on the NASDAQ, S&P, and the Dow, having broken Friday's lows, of course, in this downtrend, which we can say now with a series of lower lows and lower highs here on the NASDAQ, something very similar on the S&P with a couple of equal lows here, of course, as you can see. And then the Dow's a very bearish picture as well. So down days, bearish bodies, this is a bearish posture coming in. Doesn't mean it has to stay that way. It doesn't mean shorts only for me, but I'm certainly leaning towards shorts going in, as one should when the momentum is so very downish. That's a highly technical term, of course. The two sisters, guys, NASDAQ and S&P 1-minute charts. With VWAP, volume weighted average price, you can see prices have come back here and tested VWAP here in the pre-market. Almost identical picture on the S&P over here on the right-hand side. And we're about to open. Of course, I'm going to wait for that 1-minute open range to form. And then we'll have that for the rest of the session. Then we'll move over to my trading grid, which is here. There's that daily down day bearish body. I know I repeat the same things almost every day, almost identically, and I do that for a reason, including what I'm saying right now, and that's because repetition is the mother of skill. It's becoming a master of a single defined process. It's about consistency. It's about having my brain programmed to expect the same things over and over again, not necessarily in terms of price action and how the candles unfold, but in terms of my process, my routine, and the level of predictability of what I'm going to do in response to whatever the dance may send my way. Waiting for this to form here, guys. Let me just fix that indicator and wait for it to come back. There it is. There's the 1-minute open range, still forming. Another 28 seconds or so here to go. Let's go back to the two sisters. Now, I will be putting you on pause, guys, cutting out dead air, sideways grinding action, non-teaching moments to keep this video nice and tight. But in 10 seconds, we will have the open range, and that will be something that I'll be watching throughout this morning, certainly the first couple of hours of the session here today. There's the 1-minute open range, guys, in terms of amplitude or height. Let's take a look and see what that looks like if I can do this without messing it up. 22 3/4 points, guys, call it 23 points, and just 4.5 points here on the S&P 500. Back to my trading grid. You will notice these zones over here on the 30-minute chart. There's the Asian session, guys. Let me just expand this for you if I can. There's the bigger picture. That was Thursday, Friday, and of course now Monday. There's the Asian session, some weakness and some sideways action, then weakness again on the UK open, that changing background color. And now we've been kind of climbing back up here a little bit. So we have these impulses down and then corrective up to about the 50%, a little bit more, maybe the 618 fib retracement of this prior leg down, and then weakness again coming in here. Not right now in the moment, of course, but that's okay. Firming up a little bit here in the open range, guys. I'll put you on pause for now. I'll bring you back. Dropping down below here on the NASDAQ. Pulling back up again. Not going to do anything here, guys. Not going to chase anything. This is Monday. I call it Manic Monday for a reason. All right, guys, sell stop order. If we break down below that little wick right there, this could be interesting. Stop above the high of the session. Here we go. Sell stop order. Live order, guys. Live order. Of course, I'll cancel this order, guys, if we break above, because that will make this null and void for now. And I'm in, guys. I am in. I am short the NASDAQ. Trying to get down into this zone that you see here. Patience now. So why am I short here, guys? Well, very bearish daily picture, energy and torque, of course, from that. We have a bearish picture here on the 30-minute chart as well. Below the open range, 9 below 21, negative moving average configuration. One more push. I'm moving my stop to break even here, guys, for a no-lose trade here on this Manic Monday. Stop to break even. We do have this zone down here, which is fairly significant, not because of this, but because of where it goes back to way over here. I won't show that to you now, but you've probably seen it on your own charts too, if you do any kind of ZAR zoning or support and resistance work like I do. All right, guys, I am out at break even on that one. That's a break even to start the day and to start the week on some buying that came in right around that zone, almost to be expected. I'm going to let this video play out and we'll see if that was a resourceful decision or not to dynamically move to break even. You'll often see me do that, by the way, on Mondays and sometimes on Fridays, or certainly if there's some news coming. But I don't always move my stop to break even. It's, again, usually under certain circumstances. And this looks like a good example of what that could look like. And there it is, guys. So we came all the way back to my original stop. This would have been a losing trade if I didn't move my stop to break even. So in this case, the dynamic stop paid off in hindsight. Thanks for being here, guys. Have an amazing day and a great week. Happy Monday to you. We'll talk soon.